Hello, guys, and welcome to the Crypto County. My name is Jay, and on this channel, we talk about cryptocurrencies like Bitcoin, Ethereum, and the rest. So, today we're going to take a look at the Bitcoin chart and do some basic technical analysis. And also, I'm going to be giving you guys my pathway to a correction, to a major correction. Maybe not as deep as it's to be expected, but my pathway into a correction. All right. And also, I'm going to give you guys a special harmonic pattern which is playing out, which is currently playing out in the charts. And basically, you make of it what you want to make of it. And obviously, this is not financial advice. So just sit back, relax, and enjoy the analysis. And by the way, if you're new to this channel, please give me a thumbs up, give this video a thumbs up, hit the subscribe button, tick the bell icon, and select all so you do not miss any more of these Bitcoin updates. Thank you very much. Now let's get straight into the content. So first of all, let's just do some basic technical analysis of the price. Let's just look at the structure and know what's going on. Take a look at the volume and the rest of them. All right, so first of all, let's look at the volume. So how do we interpret this volume? So we can see that from this pump right here, we've gotten a steady decline in the volume and the price has been going up, right? So this is basic interpretation of volume going down, price going up is bearish. So that's my interpretation for the volume, all right? So let's put off the volume and look at the RSI, all right? Now, with the help of this RSI, we can also get this fractal, which I'm talking about, all right? So let's bring out the RSI, put this down. So we can see right here in the previous sessions that we started getting this steady decline in the RSI, right? We started making lower lows in the RSI, and yet we were still making higher highs in the price, all right? So now, if you don't know, this is a classic bearish divergence, which means the market was due for a correction, and in fact, we had the correction. So right now on the current day, in the current time frame, which is going to be the 4 hour, but let's just look at it on the daily. We can see that we've been getting this divergence, this bearish divergence. So we've had lower lows in the RSI and higher highs in the price. All right, so this is classic bearish divergence, which suggests that the market will be due for a correction very soon. All right, so just keep that in mind as we move forward in this analysis. So now, what else can we notice? I said in this video, I'm going to show you guys a fractal of what's playing out currently. So if you can see from previous price action, let's draw a trend line like this. So to me, this was the trend line, right? With 3 touch points. This is 1, 2, and 3. The wicks. Do not forget the wicks, guys. Very, very important. So that was 3. Sorry. So that was 3 touch points. All right. Now we broke down from this trend line, signaling to some sellers that they should go in for a short trade, right? So this didn't play out like that. Instead, we rode up this trend line to form a pattern, which I'm going to show you guys right now. Now, if we can look closely to what happened here, we can see a pattern which is not common to so many people in this market, right? So this is, I think, probably a cipher pattern or whatever it's called. I do not really care about the name, but it's a harmonic pattern, maybe a cipher pattern, maybe a bat pattern, maybe a butterfly. I don't think this is a butterfly anyways, but whatever kind of harmonic pattern this is, it's a harmonic pattern. That's what's important. All right, so now let's move on. Now we know that we had a harmonic pattern after the break of this trend line. Let's also see what happened on the daily time frame. Right, this is all part of the fractal that I'm talking about, so pay close attention to what I'm showing you guys right now. So we had this harmonic pattern. How do we get the termination of this harmonic pattern, by the way? So if you want to get the termination of the harmonic pattern, you take your Fibonacci tool, which is right there, and you drag it from the top, the beginning of the pattern, right, to the bottom, to give you the termination point of this pattern. Now the termination was the 1.272, exactly to the dollar. That was where we started getting this major sell-off, which now gave us a 5 wave to the downside. All right, keep this all in mind. After the completion of this harmonic pattern, we started getting a sell-off in 5 waves to the downside. All right, so now let's move forward. We can also see something that played out in the chart, not just the harmonic pattern or the 5-wave pattern. Something led to this 5-wave pattern. All right, so like everything works together to play out in the charts. That's what I've noticed due to experience, due to years of research. I've seen these things play out, like one pattern playing into another pattern. All right, so let's look at what else played out. If you can see, if you look very closely, you're going to see that this in fact was a head and shoulder. This being our left shoulder, this whole part being our head, and this being our right shoulder. All right, so we also had a head and shoulder play out before the dump started proper. All right, so now let's just do some basic calculations to know how we got each target, right? So first of all, right from the termination of the harmonic pattern, we can predict our wave 1. All right, so the wave 1 is this move right here. This is our wave 1. So we can predict the targets of the wave 1. How do you get the targets of the wave 1? Right, so you take your Fibonacci tool again and you drag from this point right here to the top, which gives you your targets of the wave 1 in 0.786, which falls right there, 0.786. Now that was the target of our wave 1. All right, so we then went up for a wave 2, and obviously to get the wave 2 is just simply a retracement of your wave 1, which can either fall on any of the Fibonacci numbers, 0.618, 0.786, whatever. All right, so just keep that in mind. So let's measure the wave 2 retracement. All right, so the wave 2 went, you take your Fibonacci tool also from the top of the origin of wave 1 to wave 1. We got a retracement right around 0.618. That signaled our wave 2. So after this, you can notice that we then went down for a wave 3. Now, how can we say in before time that we should be expecting a wave 3, right? How can we determine that we should be expecting a wave 3? Now, if you look closely, you can see that if you connect these points, in fact, if you connect this week, which is right here, this week to this week to this other week, which was our wave 2, which is still our wave 2, but it's in the past anyways, which is, sorry, our wave 1 in the past anyways. If you connect the 3 of them, you can see that you get a very good trend line. So obviously, people who trade based off of trend lines are waiting to sell if we break this structure, if we break this trend line. People who trade off of trend lines are waiting to sell. Now, if people are waiting to sell from here and we are already dumping, then we break this trend line. What you get when more sellers start selling, you get a sharp sell-off because there are sellers already from here, and then breaking of this trend line signaled more sellers to take more shots, which pushes the price even lower in a wave 3. But that's not only it. Remember that this is a head and shoulder, right? This is a head and shoulder. Now, a break of this head and shoulder is also a signal because this trend line was now the neckline, right, of the head and shoulder. So we broke this trend line, which now signal that, hey, this is a head and shoulder. So people who trade off of head and shoulder already, not just talking about those who trade off of trend lines, would still be taking more shots, right? So if you take the measured move from there to the bottom of, which is the neckline, to the top of the head, which would be somewhere around between this to this. If you take the measured move from the potential breakout points, nobody knew that it was going to break out anyways. From the potential, put it to the potential breakout point, you can see that the price retraced exactly to the dollar, maybe not to the dollar, but exactly to the targets of the head and shoulder in a wave 3, right? To 3. So this was the wave 3. The target of the head and shoulder gave us our wave 3. Then we went up for a wave 4 and then came down for a wave 5. Now I'm showing you guys all this because it's going to make sense when we move into the smaller time frame, which is the 4-hour, to do the analysis based off of this fractal. All right, so everything is going to make sense. So I hope you remember the harmonic pattern which played out here, right? Probably a bat pattern, then which led to a wave 1 sell-off. Then we got a bounce on this trend line, which gave us our wave 2. Then a break of this trend line gave us our wave 3. All right. Then we went up for wave 4 and then a wave 5. Now let's see how we can get the measurements for the wave 3 first of all before we move into the main analysis, which is what's currently happening. So remember, the head and shoulder gave us our wave 3. But people who trade based off of Fibonacci extension to get an Elliott wave, to get the wave 3 targets, you can still use the Fibonacci extension to get your wave 3 target. So you take your Fibonacci extension tool, put it from the origin to the wave 1 to the wave 2. And the wave 3 is normally 1.618 extension of the wave 1 and 2, right? So that gave us our wave 3 in the 1.618, which is normally the target for the wave 3. So it was obvious that that was a wave 3. All right. So now the analysis which we're going to look into based off of this fractal is still something similar because we also used trend lines, head and shoulder analysis, Elliott wave, and also Fibonacci to predict what I think would be the pathway of Bitcoin to 37K-ish. Because I think this correction is going to take us down to around the 37K region. So just keep that in mind. All right, so now let's move on to the 4-hour time frame. Let's look at this fractal that I'm talking about. So remember, we had a trend line which I drew that connected 3 points on the daily time frame. So this is 1 touch point, 2 touch points, and the 3rd touch point. Now what happened? We broke this trend line, but still we did not get a sharp sell-off in the market. Now, instead, the market is forming a kind of pattern, which is still a harmonic pattern. Exactly what played out on the daily time frame also. So you can use this for what you want to use it for. Like, interpret it however you want to, but it's so much of a coincidence for me to just overlook. All right, so that's why I'm making this video pointing out this as a fractal. Okay, so now look at what's playing out currently, and our target for this harmonic pattern right here is around the 51,700 range, and I'm going to show you how to measure the harmonic pattern and to know where the pattern is going to terminate for a sharp reversal. Like, you know, the harmonic pattern is a counter trend pattern, which means it looks bullish, like the price is going up, but the purpose of this price going up is so that we get a rejection, a reversal. All right, so first of all, we got the sell-off here. I had no idea it was a butterfly pattern, but then I noticed we got a rejection, we got a reaction rather, and this reaction ended at the 0.786. So you take your Fibonacci tool, draw from the top right there to the bottom, and that's the 0.786 right here. And you can see that we got a weak rejection from the 0.786. So now this tells me something that, okay, maybe the market is trying to form something, some kind of shape, maybe a descending triangle. I had no idea. Maybe a complex correction. I had no idea, but I was just waiting to see what the market was trying to tell me. All right. So then, after this sharp rejection, we never made it to this point until we got a major retracement of this leg right here. So basically, this leg, we got the retracement of this leg. So now we want to get the retracement of the retracement, right? So the retracement of this retracement leg, if that makes sense to you. So now we got this one, 0.786. We can just delete that. So you can see on the screen that this is a harmonic pattern for a reason, because each retracement matches up to the Fib level. All right. So now let's see if this other retracement is still accurate, is going in line with the harmonic pattern. All right. So you take your Fibonacci tool also, and you take a retracement from this low here to the top where the price retraced to the first time. So you're taking the retracement of the retracement. Now look where we got the reaction whereby I started buying again. We got to the 0.886, right? So you can see how accurate this harmonic pattern is playing out to be. We got a rejection from 0.886. And since then, we've made a macro higher high, or should I say a micro higher high in the trend, signaling that, hey, this is possibly a butterfly pattern, because we met the Fib on the way up and we met the Fib on the way down also. So this is a strong signal for me to say, hey, this is probably some kind of harmonic pattern. And based on the measurements, it looks like a butterfly pattern. All right. So now, how do we know the termination of this butterfly? Just like I showed you guys on the daily time frame, in case you forgot, you take the Fibonacci tool and you drag from the top, all right, to the bottom. Still the same way you found the 0.786, which is this B leg here, right, 0.786. But rather than looking for the retracement, you're now looking for the extension of this Fibonacci. So instead of looking for the digits around here, the Fibonacci numbers around here, you're looking for the numbers above the 100%, which is the 1.272 and the 1.618. But naturally, we've seen already on the daily time frame that it is more likely to go to the 1.272, which is why I drew this line right here, and the targets of the harmonic pattern ideally should be the 51,719. All right, but that's where the pattern is supposed to terminate. All right, but let's look at something else. I just don't want to have that in mind. I want to have confluences. All right, for me to have the confidence to say, hey, it's actually a good idea for me to take a short trade from this place. All right, so I also took an extension of this leg right here, which gave me the 1.618, and I took out my time to measure it from the wicks, but right now it's not that accurate, so let me just delete that. So that gave me also the 51,597, which is why I made this place my kill box, like the point of confluence, of major confluences, of termination Fibonacci numbers. So it's likely that we should see a sharp sell-off from this region, which is the 51,719 to the 51,597. So this is where I'm looking to place my short trades. But let's still look for other confluences like support and resistance before we start moving into how this correction should play out. All right. So for this, let's move on to the daily time frame to look at major resistance levels. All right. So let's go to the 1 day and then look at where we could possibly see some rejection from. So remember, support and resistance is a range and not a line. All right, so you shouldn't just expect the price to reject from one level like that. All right, so first of all, I drew my Fibonacci. You can see from the top, the beginning of this retracement to the bottom, and right now we're currently running into the 0.618 golden fib level. Now this is where most sellers are going to be looking to short the markets. All right, I can tell you this 100% that there are lots of people looking to sell at 0.618, but that doesn't mean we should short at the 0.618. This is something I did when I started trading, and then I short from the 0.618 or I long from the 0.618 based on the trend. And then I realized that the price just keeps going up and it pushes past the 0.618. So this is something you should keep in mind, that support and resistance is not just made based off of the Fibonacci level that you drew in your charts. All right, it's a good indication of where you should be looking for resistance or support, and not the line where you should be taking your trades off. All right, off. So now let's look for support and resistance based on this 0.618 that we drew on the chart. Okay, so let's take the rectangular tool. Let's try to look for areas of confluence. All right, so we can see from here to, should I say right there, right here, also right here. Okay, so then we can also drag this one up like this. I'll probably just leave it there. Maybe take it up like this. So this would give me my potential range of resistance. All right, if we start jumping closer, if we start moving closer to the 0.618. And why did I pick out this range? All right, so first of all, you see resistance, support, minor support, support, resistance. Yeah, so basically this region has lots of confluence of support and resistance. So this is why I think that's a good range for the price to get a reversal. All right, so now let's drag this to, so now let's drag that to the current time frame which we're trading, and go back to the 4-hour time frame to see what we can also trade based off of support and resistance on the daily. So we go up over to the 4-hour time frame. So now we can see our green box is right around determination points of our butterfly pattern, right? So right now we are jumping closer to the termination of the butterfly pattern. Don't forget, this is the 0.618 on the daily time frame, which is where the price is likely to reverse. And then we are in this box, which is full of support and resistance on the daily. Something else you can see right here is this W shape, which some people who are so bullish are going to say a W. This is a W pattern, and that's the target. And how did I get the targets? You take the measured move from this bottom right here to the neckline of the W pattern and put it to the potential breakout points of the W pattern, which already broke out anyways. And that's still another target where people who trade it as a W are looking to start selling from. All right, so but I wouldn't go that far because I don't think the price is going to go that far, because one thing also to keep in mind is that we've been having steady diminishing returns on the gains from prior highs. I don't know if this makes sense. So let me show you from this high to this high right here, we got 12%. All right, 12% return. So let's say you bought from this high right here after the breakout, you had only 12% return. So someone who bought from this other high to this other high got 5% return. So this is what I mean by diminishing returns. Like the percentage gain is completely reducing, which means the market is actually rolling over. All right. So now in this current market, from this high to this high, we do not expect it to be more than 5% of, which is the previous this return on investment from the previous high. We do not expect it to be more than 5%, right? So it doesn't make sense to say the price is going to get up to this level based on diminishing returns. It's not something you're going to take to the bank, but it makes sense, all right? And now this 1.272 makes the return around 2% from the previous high. So it makes more sense that we should be rejecting before getting to the top of this box. All right, so that's what I'm looking out for. So just have that in mind. So we could see that diminishing returns, even right from here, we had from this high, we had 16%, right? From this high right here, we had 16%. So it kept reducing. So that's what I mean by diminishing return. So keep that in mind. So now I've shown you guys the potential place where I'm looking to take a short trade. It depends on what you want to do. If you feel the analysis is top notch, you can do that. It's not financial advice. Also, please, before I continue to show you the pathway, please don't forget to smash up the like button, tick the bell icon, subscribe to this channel, tick the bell icon and select all. All right, smash up this like and share this video to your friends. All right, you might save them a lot of money, or you might even make them a lot of money if they go on a short trade. All right, not financial advice anyways. So now let's move on to what I think is the pathway. We looked at the daily time frame. Don't forget, we looked at the daily time frame. We saw how we got a sharp rejection after the harmonic pattern completed on the daily time frame. So now what should we expect? All right, we should expect something similar after the completion of this harmonic pattern, right? So what I expect is once we get to the 1.272, we start seeing a sharp sell-off into wave one, right? So this would now be our wave one. This would be our wave two, our wave three, wave four, our wave five. And I'll show you guys why I think this is possible based off of Fibonacci and also based off of trend lines and Elliott wave. All right. So now if Remember that we to get the wave one, we did a retracement from this low to the termination point, right? So if you get your Fibonacci retracement tool from that low to this high right there, remember the target was 0.786. Now look where the 0.786 falls under, which is this line that I drew right here, this blue line, which is around 45,601. So now let's delete that line. That's Fibonacci, since we already know the target of the wave one. Now, luckily for me, to back this up, this retracement into the wave one also falls around this trend line, which I showed you guys, something like this also on the daily time frame. All right, so this is why I'm calling this a fractal, because everything is just playing out the way it played out already. So this trend line, which already had resistance, support, can now flip to still be support again. So this is why I think this is where we're going to end our wave one, then retrace probably 0.618 retracement into wave two, which also happens to be a resistance, right? Because I drew this line already, because I found a strong resistance or a strong support, which can now turn to resistance. So that would give us our wave two. And then after we go for the wave two, what are we now going to form? Remember what happened on the daily time frame also, guys. Left shoulder, head, which was the harmonic pattern, and then a right shoulder, which was the completion of the wave two. Remember what happened. All right, so we're now going to be forming a head and shoulder. Now, a break of this head and shoulder neckline would now give us a wave three. If you can remember, the measured move of the head and shoulder on the daily time frame gave us our wave three. So you take the measured move down to this point, you can see around that range is where we're going to get our wave three. Now let's also look at it in terms of people who trade it as Elliott wave. They're looking for a 1.618 trend-based Fibonacci extension for the wave three, right? So we take our trend-based Fibonacci extension from the origin 0 to wave 1 to wave 2. That's pretty close if you ask me. So we can actually shift our wave 3 to somewhere around there. All right. So that will give us our wave 3. Then we go up for our wave 4. Then come down for a wave 5. Now it makes sense for this to be the top of the wave 4 because this is actually resistance and support. All right. So it makes sense like that. So just look at it like this, guys. This is what I perceive to be the pathway of Bitcoin down to the 37,000 range. All right. I'm looking for Bitcoin to drop to around 37,000. What happens after that? If you're going to start shooting back up into a bull market, I don't know. If we're going to do a 5 wave down like this to give us a larger wave 1, and we go up in a zigzag, then start coming down again for the major wave 3. I do not know, but currently the analysis is bearish. That's the whole point. Now let's look at another possibility that can happen here, because we shouldn't forget that this was a 5 wave move to the upside. All right, so it's possible that we've started a new impulse wave to the upside. All right, so if after the completion of a 5 wave move, what should we expect? All right, it's either a zigzag or an ABC correction. All right, so that now means that we might not get this 5 wave move to the downside, but instead we get maybe an ABC correction, something like that, or a zigzag, something like that. All right, and this, if we get a correction like this, I would start looking at this structure of the market differently, and I'll probably start flipping a little bit bullish, because we getting a 3 wave correction instead of a 5 wave correction to the downside means we're going for a larger wave 2, right? So this whole move right here will be the wave 1, and then this is probably an ABC into a wave 2. Then we're probably shooting up to the moon, all right? But if we do not get if a 3-wave move to the downside and we get a 5-wave move instead, then I think we're probably more bearish than we think, all right? So this is what I'm looking out for. I've given you guys all the different scenarios. I've given you guys the shapes that I think would play out. I've shown you the harmonic pattern, which is currently playing out. I've shown you the targets of each of them. All right, I've shown you the targets. The target of the wave 3 will be around the 39K, 40K region. Then the wave 5 completion will be around the 37K region, which is where I think Bitcoin is heading to in the medium term. All right, then what happens from there, we're going to see. Okay, but right now, this is what I'm looking out for. This is my analysis. If we're getting a 3-wave move to the downside or we're getting a 5-wave move, it doesn't matter. The market is going down. All right, so that's why I'm looking out for shorts right now. And I showed you guys the confluences, support and resistance on the daily, 0.618, and the point where this harmonic pattern is supposed to terminate, which is the 1.272. Basically, this green box is where you should be looking to place a short trade if you want to do that. So guys, that will be all. Thank you guys for sticking through this video. Thank you guys for paying attention. If you did enjoy the video, please give this video a thumbs up. Don't forget to subscribe, tick the bell icon and select all. Thank you very much for that. Share this video with your friends, and I'm going to be seeing you guys on the next video.